Let's bring in Evercore ISI restaurant and packaged food analyst David Palmer for a bit of conversation about this. David, first off, are you getting a lot of questions from your clients about the impact on the companies you cover from these GLP-1s?
It's definitely a big topic, and it gets conflated with the fact that a lot of our companies aren't doing that great right now, volume-wise. So, I think there's obviously also rate fears between the rate issue and the fact that many of our dividend fountain companies would be marked down because of that, the volumes or traffic, depending on the sector. And of course, GLP-1 kind of gives a face to the enemy, so to speak, in terms of one reason why volume or traffic would be down for food and restaurant companies.
It seems a little hard to imagine that it really could be the reason. I mean, we were having this conversation a bit earlier. It is early, not to understate the significance of these drugs. Where do you come down? How do you answer those who ask you, well, are they having an impact already on sales?
Well, we talk to our experts here, like Umar Rafad, who covers many of these companies in the weight loss area. 5 million or so are on these drugs. 10 million have tried them. The average consumer is often dropping off, or an average of 10 months into it. So it's interesting that you're even getting some evidence that there's some attrition that goes along with this. So getting from 5 million adults up to 15 million over a few years gets you roughly, it could be upwards of a half a point headwind per year over those 3 years. That seems on the high side. Meanwhile, that doesn't seem to be big stuff when you can think about food, for example. Our food companies right now are down 7 to 8% volume. The overall measured food is down 2% as people are pinching pennies, spending less at the supermarket. In restaurants, volume's down a little bit, 1% or so. But the big deal is always going to be pricing power. For example, McDonald's over the last 10 years or so, they've averaged down 1.5% traffic per year, and yet their stock's up. It's been a triple because they've done a lot with check, premiumizing what they do sell in the U.S. So we're trying to put everything into context. It's pricing power is more important, and food companies are dealing with way worse than just Ozempic right now in terms of their volume declines.
Yeah, I mean, so the restaurant industry, the restaurant S&P sector is about 16% off the 52-week highs. Are there growth stories in this group? Are there some that have been thrown out that don't deserve to be?
Absolutely. Right. We talked about in the food side, there's food company. Most of our food coverage are losing share in overall the overall share of stomach. In restaurants, the companies are gaining share in terms of share of stomach, and that is true in the casual dining space, where players like Texas Roadhouse are gaining a lot of share in casual dining. But it's also true that many of our restaurant companies are global, and there's accelerating and very strong growth. Even in Europe, we're seeing some good peer growth out of UK players over there. We're expecting very strong results and accelerating unit growth overseas. Tim Hortons in Canada, for example, is also doing very well. So the global guys are doing well, and in terms of an environment where we're going to have some inflation, the beef cycle's real, hourly wages are still going up. These large share-gaining franchise players, whether that's Taco Bell next year or McDonald's, Burger King's doing pretty well right now as well. These global players with a share gainer domestically will put you in pretty good position to have a rebound. As you point out, now we're approaching the lows on valuation on a multi-year basis on many of these.